Hey everyone, Drew Creekmer here, Wealth Advisor with Creekmer Wealth. Hope you all are doing well since the last time that we chatted. In today's flash briefing, we are talking about inflation and really what is inflation and why is it something that you're hearing about more right now, and just some things that you need to keep in mind when it comes to your investments and how you can best prepare yourself for inflation if you need to. So, inflation is the rising cost of goods and services. For example, the price of a car may be more now than what it was 5 years ago. And of course, over time, obviously prices inflate. The average inflation rate is north of 2.25%. It has averaged out on over the last number of years. However, as we are coming out of the coronavirus pandemic, there has been a spike in inflation. Now, a spike in inflation is not necessarily a bad thing because generally inflation is tied fairly closely to economic growth. And as we all are aware of, we've actually seen our economy expand in part because there is true economic growth, but also in part because there have been trillions of dollars of government stimulus pumped into the economy to further backstop the economy and the markets against what was a tight economic shutdown earlier in 2020. And so you couple the government stimulus with people now going out and about their life, having some additional residual income to spend on top of some supply chain constraints. And what you have is one of the largest month over month increases in inflation on record. Now, the Federal Reserve and the government seems to believe that this spike in inflation is what they're calling transitory, meaning it should not be here for an extended period of time, like we experienced back in the 70s, where we had essentially a decade of inflation and of lost growth. And so, whether it's transitory inflation or just a multi year trend, only time will tell. That said, there are a few things that you should keep in mind when reviewing your investments and your portfolios. One, you need to look at your fixed income allocation. This is something that we've done recently here in house at Creekmer Wealth, and we've made adjustments in our clients' portfolios. Currently, interest rates are at all time lows. And when you couple all time low inflation rates with the possibility of an increase in interest rates, uh, fixed income is not something that you want to have a ton of your portfolio in. Now, obviously, bonds do a great job balancing out stock market volatility whenever it happens. Bonds are the ballast to a portfolio when the markets get rocky. However, if a bond is paying a historically low interest rate, and we know that interest rates, when they go up, bond prices go down, we know that bonds are going to essentially not generate a great amount of return in your portfolio over an extended period of time. And so, if you have a high allocation of bonds in your portfolio, they're serving the purpose of decreasing your volatility, but they also are probably providing a drag on your overall returns in your portfolio. We found some really great solutions to still balance out that volatility in your portfolio, but to provide a greater return than what bonds are looking like they will over the next number of years. So, one, check in on how much you have in fixed income. Two, your stock market investments, you need to ensure that you either have the right mix of high quality growth stocks and value stocks. During inflationary times, typically, if it's a multi year trend, high growth companies' stock does not perform as well. And during that time period, value stocks, think companies like Pepsi and Walmart, companies that are more slow and steady, they tend to do better during an extended period of inflation. And so, right now, since there's a lot of unknown around, is this just transitory inflation or is this a multi year trend? You need to balance having the right mix of solid growth companies, such as Amazon or Shopify, in your portfolio, mixed with solid value names. Now, we don't want to buy companies that are junky on either front. We want to buy the highest quality company stock in this type of environment. And so, we made some tweaks there as well. And so I would encourage you, if you're concerned about inflation, or if you're concerned is, hey, is my portfolio correctly positioned for inflation, whatever that may look like over the coming months and years, if you're concerned about that, I would tell you to give us a call. We have done a ton of research on past periods of inflation over the last number of weeks. We have done a number of deep analyses on various markets and what investments are correct. So I would tell you, give us a call if you have concerns around inflation. Let's talk about it. Let's have a conversation to ensure that you have the information that you need to be in the right position to still achieve your financial goals in the months and years ahead. And so that is all I have. I would encourage you to read the article here as well. Otherwise, if you have any questions, don't hesitate to reach out. Thanks, and we'll talk with you soon.